Welcome to the channel. I'm James, and today I'm going through my stock valuation methods for Alphabet Inc., otherwise known as Google, and to see if this is a buy in 2022. They had earnings yesterday and absolutely smashed earnings. As you can see, reports big fourth quarter beat, stock pops. The stock is almost up 10% on the pre-market to its all-time high of $3,042 a share. What we're going to be doing is looking at the financials, then giving my fair value based on discounted free cash flow models and the Buffett-Graham intrinsic value to see if this stock is a buy. So we'll quickly touch upon the news. There's a lot of big news. They beat Alphabet beat on top and bottom lines for the fourth quarter. The stock jump extended trading after the report, which we just saw, and the company announced a 20-for-1 stock split. We're going to be talking about that when we talk about Google shares. This is potentially big news for the stock, and I'll give you some reasons why. So just on the highlights here, Google, parent Alphabet, reported better than expected fourth quarter earnings and revenue. Shares popped more than 9% in extended trading. The company announced a 20-for-1 stock split that will go into effect in July. Here's some of the key updates. Earnings per share up $30 to 27. Revenue up 75 billion to 72 expected. YouTube advertising revenue, that's good for us, or good for me, I'd say. 8.3 billion to 8.7. And you can see the revenues up and the traffic acquisition costs, TAC, are also up. So this has also reported a revenue growth of 32%, and we'll be talking about that in a second. So what we will be doing first, we'll be looking at my steps to give sort of a key understanding of it. We'll be touching upon the financials, and then we'll go into my value. So firstly, Google has a market cap of 1.8 trillion, one of the largest companies in the world. We discussed the share price before, 52-week low of 1,850 and is now 2,700. So that is a $1,000 increase on the shares. That is crazy. But let's get into it. Is the P ratio less than the market? No, the market currently has a P ratio of just under 26 and Google has just over 26. So that is a fail, but that is not bad news at all because Google is a massively growing tech company, as we've seen, and you'd expect this to have a higher average in the market, but it doesn't. So that is good news. Revenue. Is the revenue up 136 billion to 257 billion. So that has almost doubled, and we'll just have a look at where revenue comes from. So this is the financial quarter here. You can see it has the quarter ended December 31st, 2020 and 2021. Then they have the year ended. For the quarter, previous year was 56.8 billion, and now it is 75.3 for the quarter. And if we get the year end, 182 billion to 257. So up 41% on the quarter and up where it was this time over the last years. We just see how this is broken down. This is on the quarter end, not the full year. But if we compare, I'll be reading out the previous year's quarter and then the current one. Google Search and Other up from 31 billion to 43. YouTube Ads is up 2 billion in that same time. Google Network, which is up about 2 billion as well. Google Advertising, 46 to 61, so that's up massively. Google Other, we won't be breaking that down, but you can see that's up a small amount. The Google Services total, 52 to 69. Google Cloud's up massively as well, 3.8 to 5.5. And they have some other stuff here that's a bit smaller, but overall the total revenues for the quarter, 56.8 to 75, so up massively. Next, we want to be seeing if the profits increased, and profit has more than doubled, 30 billion to 76. And if we take this into account of here, revenue has almost doubled, but profit has more than doubled. So they're getting more profit out of their revenue, which is excellent to see. We can see the profit breakdowns here. We've got the net income for the quarter, 15 billion previously and now 20 billion for the quarter, and year ended December 2020, 40 billion and now 76 billion. So that is up massively. And how do we get the profit? Well, this is operating income, which is the loss minus off the revenue. So you can see that services 19 to 25. Google Cloud's revenues losses are actually down, but they're down and they're still increasing Google Cloud, which shows the sort of powerhouses that these things can be. But you can see that that's basically up. Next, we want to talk about the shares outstanding. That is my next step. So are they decreasing? Are Google buying back their shares? Yes, they are. 639 million to 677. So they are rewarding shareholders. But one thing that you'll be interested in is the stock split, a 20-to-1 stock split. That does not mean they're issuing new shares. It doesn't count like that. Basically, everyone who has a share will now get 20 of those shares, and then the share price will be divided by 20. So if you see here, you can see stock split to form of a stock dividend. Alphabet announced that the board of directors have approved a 20-for-1 stock split, a one-time special stock dividend as well. Wow, that's excellent to see, on the Class A, B, and C shares, subject to stockholder approval and the company's overhead, and will increase the number of authorized shares across them. So what does that mean? Well, right now, you can see that they have been buying back their shares. This is quarter end 2020 and 2021. 675 million to 662, and on the year 680 to 667. So they're buying back the shares. But back onto the stock split. So what I wanted to draw your attention to is what we will do is have a look at Tesla. Why Tesla? So Tesla did order their 5-to-1 stock split, and that was done on August. They announced it on August, and it was going to be approved later. So you can see if we go to here, it was announced in August. The share price took a massive jump up from 250 to 500. Then the stock split happened. The share price actually decreased briefly, but then you look, shit, Tesla has gone from strength to strength. So why is this useful for Google? Well, it's actually quite a simple reason. It will go 20-to-1, so it'll be about 150 a share. Right now, it's hard to buy Google if you have to buy full shares, or if you want to do options on Google, because it is $3,000 a share. So now this enables a lot of people to actually purchase whole shares of Google. Not everywhere offers fractional shares, and they can also trade options on it, because the options are in lots of 100. You need 100 shares to trade an option, and if it's $3,000, that means you need a lot of capital. But if it's 150, it's a lot more realistic, and this puts it in similar prices to Apple and even Microsoft, which is a bit more. So this could be a very good thing for Google. People will be able to purchase their shares more frequently, and with things like Robinhood and sort of the retail traders at the minute, this opens it to a lot more investors. So I would expect this to go up. Next, what we're going to look at is the free cash flow. Is this increasing? Yes, it is. 22.8 billion to 67. So if we just go back to the financials. So next we're going to be looking at the free cash flow, and we go to the cash flow statements and we look at the operating activities. We get the net cash from operating activities, which is outlined here. And then what we do is actually Google tells you to do it on the quarter. You minus purchases of property and equipment. Purchases of property and equipment are this line here. So the operating income in 2020 for the quarter was 22 billion. Now in 2021 it is 24, and you can see that also the property is about the same. So free cash flow has increased in the quarter, but if we do it for the year, 65 billion minus 22, which is around about 43, compared to now, which is 91 billion. Take away 24 billion, which, as I said before, is 67 billion. So free cash flow is up dramatically. So the only failure is the PE ratio, but I'm not worried about this at all, because as I said, this is a growth stock and it's about in line with the market. Fundamentally, this company is solid, and the free cash flow ratio, 1.8 billion divided by the recent free cash flow, is 27. So these are very close. Now we're going to look at discounted free cash flow and the Buffett-Graham intrinsic value. First, we'll look at discounted free cash flow. I've calculated the future free cash flows here, and then discounted to today. This is with 2022 being 63 billion, which is actually less than 2021. But let's see what that gives us as a value. Google is undervalued, $3,000 a share. Well, actually, it's about where it is right now because it's trading higher in the pre-market. So free cash flow, discounted free cash flow models are saying the stock is about fairly valued. But what we'll do is we'll have a look if we're a bit more bullish on 2022. So firstly, the net income margins. This is total revenue divided by net income. Revenue and incomes are up. So let's just change that the more recent year, and you can see that will put cash flow to 77 billion. And that would say it's at 3,600 a share, which is a 33% discount. So if it's more like 2020 rather than the previous years, and let's just say 2020 is going to be the baseline for everything now, that's 88%. This is a revenue growth rate of 29. 29 is a bit too bullish, because you can see analysts think it's about 13. That would put the stock at $4,000 a share, but I think that's a little bit too high. Let's say that it grows about what analysts say, 3,400, which is still a 23% discount. Next, what we're going to do is look at the Buffett-Graham intrinsic value. This takes an earnings per share expected growth rate into account, and this stock is a lot more liked by the fair value, $6,600 a share, which means it can almost double, which does seem a little bit high, but then again, the stock has basically doubled over the last year, and this is if it keeps on growing at the expected growth rate, which analysts say is 27% over the next few years. So what does that give us an average as? Well, about $5,000 a share, 81% discount if we take those averages. But even then, if we do lower the free cash flow, what it originally was, which was around about $3,000 a share, you can see that this still puts the average at about $4,700 a share, which is at a 71% discount. Now we're just going to quickly look at some of the technicals for Google. We'll go to the previous year, and this has the moving averages. So we've got the 50-day in green, the 100-day in yellow, and the 200-day in red. So what are we looking for here? Well, the share price is currently up about here in the pre-market. The moving averages, it's broke through all the major moving averages, which is a bullet sign. Seems Google has consistently over the last year, if we just go there, has been above the 50-day. When it did drop below it, it shot up above it once again. So this would mean that Google is above the 50-day moving averages, and the 200-day, when it did drop below, has acted as a support line basically up until the pandemic. And if we go before that, Google very rarely drops under the 200-day. So that was considered a buy signal, and if you did, you would have bought it, and you picked the right time because earnings were a blast. So on the technicals, it is looking pretty strong there. Now what we're going to do is look at my other favorite ones, which is MACD and RSI. So let's quickly go to the MACD indicator first. This is moving average convergence divergence, and we'll just go to the year. So well, there you go. So it has switched, which is a buy signal. Once the MACD and signal lines have crossed, that would be a buy signal. You can see it's defined here. Also, one thing that's bearish is that the MACD and signal lines are in below zero. This has happened before, but you can see here the MACD line switched, but the MACD and signal line was still above zero, which is a bullish signal. So you could even wait out, hold up. If they go above there, then that would be a buy signal as well. But MACD is looking positive. And finally, what we'll do is we'll look at the RSI, which is the relative strength indicator. Is the stock in overbought, oversold regions? Right now, it was in oversold regions for the day, which would be a buy signal, but obviously it shot up and got to that point. So I would expect it even going a bit higher. Google seems to be consistently in the overbought to sort of average ratings, but when it is in the oversold regions, they look like pretty good buy signals. Pandemic buy, there's a buy, and there would be a buy. So if it ever does get into oversold regions, that would be a buy, and that's on the daily. And then if we look on the weekly as well, this is to 2005 because it's on the weeklies. You can see it doesn't go in the overbought regions, oversold regions often, but when it has, big price movements following here in 2018, there in 2019, definitely in the pandemic when it was $1,000 a share. It's now gone 3 times that, and here it was slightly. So RSI saying it's a buy, and if you do see Google in those oversold regions, definitely a buy signal. Right guys, thanks for watching. Please give a like on the video if you enjoyed it. Give a comment down below on your thoughts, and I'll catch you guys next time.